This is the tech exploit, and this is the story of how Justin Sun and World Liberty Financial went from partners to enemies inside the most politically connected crypto empire in American history, Trump's crypto war. He invested $45 million into the president's crypto company. He bought $100 million of Trump's meme coins. He was their biggest believer. Then he said no to one more investment request, and everything fell apart. World Liberty Financial launched in 2024. The pitch was straightforward: a decentralized finance project backed by one of the most powerful names in the world. Co-founders included Donald Trump, listed as co-founder emeritus, his son Eric Trump, business partners Chase Harrow, Zachary Folkman, and Zach Witkoff, son of Trump's own Middle East envoy. According to financial analyses, 75% of token sale revenue flows directly back to the Trump family through their holding company. The project has reportedly generated over $1 billion for the family. Justin Sun saw it as the opportunity of a lifetime. Sun is the founder of Tron, one of the largest blockchain networks on Earth. His net worth sits around $8.5 billion. He's flashy, controversial, and deeply connected in global crypto circles. He'd already had run-ins with the SEC over market manipulation charges, settling for $10 million in 2025 without admitting wrongdoing. But he was a true believer in Trump's pro-crypto agenda. In late 2024, he invested $30 million in World Liberty, then bumped it to $45 million in January 2025. He was named an advisor. He bought $100 million of Trump meme coins just to show support. At his peak, Sun's World Liberty token holdings were valued at over $1 billion. Then came the pressure. According to Sun's federal lawsuit, between April and July 2025, World Liberty executives, including co-founder Chase Harrow, repeatedly pushed him to invest even more, up to $200 million more, in a new stablecoin called USD1 that World Liberty was developing, in equity stakes in related entities. Sun said no, and he kept saying no. That's when he alleges the threat started. Chase Harrow and others allegedly told Sun they would burn his tokens, permanently delete $320 million worth of digital assets if he didn't comply. They allegedly threatened to report him to U.S. authorities. And then, in September 2025, when WLFI tokens finally became tradable to the public, Sun's wallet was frozen, secretly. He could not sell a single token. He could not vote on a single governance proposal. On-chain blockchain analysts later found that World Liberty had quietly upgraded its smart contracts to include hidden backdoor functions that allowed specific wallets to be blacklisted, functions that were never disclosed when Sun invested, functions that directly contradicted the project's public promises of decentralization. 4 billion tokens, frozen, worth $320 million, gone, just sitting there, locked, while the token price crashed from 31 cents all the way down to 8 cents. Sun went public on April 22, 2026, filing a federal lawsuit in the Northern District of California. He was careful. He made sure everyone knew this wasn't about Trump personally. He wrote, "This lawsuit does not change how I feel about President Trump or the Trump administration. Unfortunately, certain individuals on the World Liberty Project team have been operating the project in a manner that goes against President Trump's values. Smart move, separating the man from the machine." World Liberty fired back immediately. Zach Witkoff called the lawsuit a desperate attempt to deflect attention from Sun's own misconduct. Eric Trump called it ridiculous. The company countersued Sun for defamation 2 weeks later, claiming Sun had launched a smear campaign to cover up his own bad behavior. Neither side has been specific about what Sun's alleged misconduct actually was. Let that sink in for a second. The president's son, the son of the president's Middle East envoy, in a federal lawsuit, fighting over frozen crypto tokens, with a billionaire who previously paid $6.2 million for a banana duct taped to a wall, and then ate it. This is where American crypto is in 2026. But strip away the spectacle, and here's what this story is really about. A project that marketed itself as decentralized, transparently governed by its token holders, allegedly built secret backdoor controls into its own smart contracts. Controls that let insiders freeze, blacklist, and threaten to destroy the holdings of any investor who stopped playing along. If Sun's allegations are true, this wasn't decentralized finance. It was a trap with a presidential seal on the door. The SEC dropped its separate investigation into Justin Sun earlier this year. Senator Elizabeth Warren publicly questioned whether that decision was connected to his $145 million in investments into Trump-affiliated projects. Nobody has answered that question. The case is now in federal court. The token price is down 75% from its peak. Sun's $320 million is still frozen, and the Trump family's crypto empire, which raised over $1 billion on the strength of the most recognizable political brand in the world, is now at war with the very billionaire who helped make it credible. The crypto gold rush attracted idealists. It attracted innovators. And apparently, it also attracted people willing to freeze a billionaire's assets when he stopped writing checks. Subscribe to the Tech Exploit. Every week we follow the money, wherever it leads. New investigation dropping in 2 days. Don't miss it.